Hi guys, this is Dean. Today we're gonna look at the US sector tab on Koyfin. Before I start, I just want to let you know that you can get 20% off Koyfin plans in the link in the description. Now, the US sector tab that I have opened on the screen right now is one of the market dashboard that is pre-built by Koyfin. It's already set up. You don't have to build it yourself. It's already there as a default. That means you can't edit it. However, it's pretty good already. You don't have to really touch it. You have a bunch of, it's called the US sectors, but actually you have a bunch of sectors and a bunch of industries in the US represented as ETFs. Okay, these are ETF products that are grouping certain sectors and industries in the US, and basically Koyfin is pulling these ETFs and representing them on the screen. So I have the US industries here, but let's start from the sectors, if we will. It's the first part here is the US sectors. We have the main groupings. I'm going to change it to 10-year on the chart. And let's go through the constituents here. We have consumer discretionary, consumer staples. So if you don't know the difference between the two, consumer discretionary is discretionary item, so the excess disposable income will go into this, for example Ferraris, expensive watches, etc., while consumer staples are the necessities like toilet paper and toothbrush, stuff like this. Then we have energy, financials, healthcare, industrials, materials, real estate, technology, communications, and utilities. Let's have a look at how these performed over the last 10 years. So obviously the biggest outperformer is technology with a 545% outperformance in the last 10 years. Then we have the consumer discretionary sector, which makes sense because this is more sensitive to the business cycle. Then we have industrials. Then we have financials, healthcare, utilities, materials, consumer staples, real estate, communications, and energy. Okay, let's see if we reduce the time frame. Maybe we'll put year to date. What has been happening? Well, in the last couple of months, utilities has gone really up, which is not a good sign for the sentiment in the market, right? Utilities is where people run to when they fearing a recession, because this is kind of a value play. It's a defensive play, really. So if you have been in utilities since the beginning of the year, you would have returned 31%. Not bad. After that, we have communications or telco, telecommunications, financials, industrials, technology, consumer staples, energy, and then the other ones kind of grouped together, but really utilities is the one that has outperformed everything else since the beginning of the year. Let's have a look at the industries available. So I'm going to deselect sectors and I'm going to select all the industries. We're going to go back to the 10-year chart. Let's see what we have. We have metals and mining. We have REITs, which are real estate investment trusts, so vehicles to express a position in real estate instead of buying bricks and mortar. Gold miners, MLPs, home builders, oil services, regional banks, retail, agriculture, internet, biotech, semiconductors, oil and gas E&P, clean energy, insurance, water resources, software, solar, and airlines. And in the last 10 years, it's the semiconductors that has outperformed by 1,000%. Pretty crazy, right? Let's see if we reduce maybe to a 3-year chart or even a 3-month chart. You can clearly see things are moving with the general market. Probably if we put the S&P 500, we will see it kind of as an average in somewhere. Where is it? The SPY, it's a black line, so I can't see it. But yeah, it's basically the same. And but there are industries that outperform others, and that's the whole trick, is to find which ones are going to outperform the other. And actually, I want to show you something, guys, that may help you in this endeavor. You probably already know what the PMI is. This is an economic indicator called the Purchasing Managers Index. It's an economic survey, a very frequent economic survey. It's a monthly survey. And there's a private company who used to do the PMI surveys. It used to be only the ISM in the US, the Institute for Supply Management. But recently, or not recently, but for the latest one is really from another company who was called Markit, M-A-R-K-I-T. And they used to do PMIs their own way, do the surveys themselves, and they used to cover the whole world. And actually, S&P Global has bought them. Now the Markit PMI releases are part of the S&P Global group. And S&P Global are this big company of market intelligence, and that's actually where Koyfin uses their financial data from. They pull their financial data with an API from S&P Global. And anyway, I'm getting a bit carried away here, but my point is, if you go to try and type PMI S&P Global on Google and try to find this page, the press releases of the PMIs. And here you'll have a list of PDF that is a flow that comes in, right? Today was October the 3rd. Every day you have 100 PDFs coming out. And where you have all these reports from S&P Global, or formerly Markit, and they publish for free PMI reports, and they publish sectoral PMI reports, industry-specific PMI reports. So I invite you to go for Control F or Command F and find sector, and you'll find reports that are just for sectors. So for example, you have Asia sector PMI, Europe sector PMI, US sector PMI, global sector PMI. And this is how it looks like. This is the US report that was published today. That's for the month of September. Of course, we're the 3rd of October. And they not only have the aggregate PMI for the super sector like manufacturing or services, but they also actually go deeper and give you the rankings in terms of the sector itself. And if you don't know what the PMI is, it's a hugely highly regarded economic survey which predicts the economic cycle in advance, because it's the purchasing managers of companies that answer questions about the business, the current state of affair in the business. Are they ordering more? How is their inventory? How is their new orders from customers, etc., etc.? And then they get a score that is either under or above the 50 mark. The 50 mark is the middle. It means everything stays the same. If it's above 50, it means the economy is growing. If it's below 50, the economy is contracting. So here we have the actual PMI results by sector. So you can see in the month of September 2024, The healthcare sector is around 56, 57, while the basic materials is around 46. So this one is contracting month on month, while this one is expanding month on month. And even we can see the previous month of August was also contracting, expanding, but not such a fast rate. So it would be interesting to actually look into obviously you should do further work, but you can have a bullish bias towards healthcare, financials, consumer services, etc. And I also invite you to look at the other regions, because the American companies are spread out over the world and their value chains are their value networks are connected with the outside world. So even if you look at the global sector PMI, or the Asia sector PMI, or the Europe sector PMI, this will affect American companies just as much. And I like the other ones because they give you more industries. You can find even more tailored ideas. You have pharmaceutical, biotechnology, healthcare services, software and services, insurance, banks, media. I mean, it's all there. It's really detailed, the reports that they give you. And if you pair that with a tool like Koyfin, where you can, dig deep and find the data points, this is really helpful. So guys, I invite you to go and have a look at the US sector tab in Koyfin, and I will see you in the next video.